business model for broker-dealers is much different than that for investment advisors. We use the term customers for broker-dealers because broker-dealers are selling securities products or recommending that somebody make a transaction in a security that will benefit the broker-dealer. So they sit across the table from their customers and they make recommendations that are suitable, and of course they don't do anything dishonest. But the advisor is a fiduciary. They're managing the client's assets, or they're at least telling them what to do, and they have to make sure that all that advice is objective. If there's any sort of double or side benefit that the advisor might get if the client accepts a particular recommendation or trade, then that's the conflict of interest that has to be disclosed. So a fiduciary relationship, I'm your advisor, I'm managing your money, and I have to put your interests ahead of my own. So in the brokerage industry, we have the firms, the broker-dealers, the individuals who work for them, the agents, and then securities are always issued by somebody, usually a company, sometimes a government, like the state of Kansas or the United States Treasury. Broker-dealer under the Uniform Securities Act is any person in the business of effecting transactions in securities for the account of others or its own account. That means that some broker-dealers are just routing orders to the appropriate party, and so that's acting for somebody else's account. And then some broker-dealers are executing transactions for their own account, where they buy from or sell to the investor. Either way, it's a broker-dealer. As I said, the firm registers with a Form BD, and then when they hire agents and supervisors called principals, they have to file forms to have those individuals associate. So if I represent a broker-dealer or an issuer, and I'm in the business of getting paid to execute the trade or to sell mutual funds, for example, I'm an agent of the broker-dealer, and I'm going to have to register with a U4. Part of that I have to fill out, the rest of it my broker-dealer has to. An issuer, very broad definition, it's any person. Could be a human, usually it's going to be a company, but either way, it's any person who issues or proposes to issue any security. So during the Snapchat or the Facebook IPO, Snapchat or Facebook would be the issuer, and then certain broker-dealers are gathering up large investors to see if they have interest in buying this particular stock. That's happening because agents who work in investment banking are calling those clients, and the broker-dealers who are running this offer are holding road shows so that institutional investors can ask various questions. But whether it's an IPO or just a trade for shares of Microsoft today, broker-dealers and agents are in the business of transactions. Some customers use just a broker-dealer. They open an account online, they enter their own transactions. The broker-dealer does a lot of paperwork, they have custody of their assets in many cases, and that's all that investor needs. But for investors who want portfolio management, they're going to go to a registered investment advisor. An advisor is compensated for either telling people what to do through a report, or more often probably managing their portfolios. Instead of having an agent try to sell a product or talk you into doing a transaction, your advisor would typically ask you to grant discretion, and then they would trade the portfolio on your behalf with your best interests in mind. So they don't really sell product at all. They're providing a service called investment advice, but that advice is often portfolio management. The individuals who work for the advisor, not every single employee, but as you can see from that kind of long bullet point list, if the individual is involved directly with the investment side of the business, meaning not the receptionist, not just doing filing, but they're managing accounts, or they're telling people what to do, or they're part of a team that helps determine what people should do. And for a lot of IARs, they're really just out there trying to find new clients selling services of the firm. But all of these individuals plus the supervisors are considered investment advisor representatives. They actually end up taking the same exam, meaning if you were to form your own registered investment advisory business, you and your partners would need to pass a particular exam, and then the individuals who are going to be acting as IARs would also have to pass that same exam, and more importantly, they would have to get licensed by the state securities administrator. We looked at the differences between broker-dealers and registered investment advisors. Because investors can't always see the difference, the SEC recently required both broker-dealers and SEC-registered investment advisors to provide something that we're looking at here called Form CRS, Customer Relationship Summary. For my biggest account, which is the IRA, I use a particular RIA, and as you can see, I kept their CRS relationship summary. So up until about 2 years ago, I had rather small accounts with a broker-dealer, which I just managed myself, never asked for advice, they never offered it. It was low-cost commissions, all directed by myself. But when the IRA got to a certain account balance, this RIA reached out, and since then, they've been managing my biggest account in exchange for 90 basis points. If the account gets bigger, that fee may drop to 75 basis points, but either way, they bill me quarterly to manage my portfolio. And they explain that TD Ameritrade Investment Management, us, we're registered with the SEC as an investment advisor. And then they're also affiliated with a broker-dealer. And that broker-dealer also has another advisor for fixed income. Either way, they're wholly owned subsidiaries of a bigger company because Charles Schwab recently bought TD Ameritrade. And as we were saying earlier, brokerage and investment advisory services and fees differ, and it is important for you to understand the differences. And then there are tools that you can do at this link here, where you can also see if any of their individuals or the firm has or have had disciplinary problems. What services and advice can you provide me? So this is basically the SEC requiring the firm to use certain questions that an investor might ask. We offer advisory services primarily to retail investors. They lowered their account minimum in order to pull in some retail investors. Up until a few years ago, a lot of advisors wouldn't take on an account under $1 million or $2 million, maybe even $5 million. They've lowered that. Obviously, that's what you have to do if you're primarily trying to manage money for retail investors. We have managed portfolios for long-term investors known as essential portfolios, selective portfolios, and personalized portfolios. And these are provided on a discretionary basis. So when you sign up for their service, part of the agreement explains that you're granting discretion. And then, as we said, portfolio managers need discretion so that they can now manage your account. As opposed to what? Well, in my other accounts, which are just brokerage accounts, the only trading would happen if I decided to make a trade. And then for additional information, please see Form ADV Part 2A. That's known as the advisory brochure, which looks like this. It's a little large. So as we said, or they said, we're registered with the SEC. That's also known as a federal covered advisor. One way to be eligible for SEC registration is to manage at least $100 million. Another way is to be the advisor to an open or closed-end fund, what we call mutual funds. So Janus Capital Management, just by definition that they manage the Janus funds, makes them a federal covered investment advisor. And all advisors, whether state registered or federal covered, they have this disclosure brochure. Form ADV is how they register with the regulators. A lot of that information is then repeated here in the brochure. This goes to clients who are about to sign up for their services. But even though you might have had to pass some exams, even though you had to go through a bunch of registration hours filling out those forms, there are other firms that are not required to register. So registration with the SEC or any state does not imply a certain level of skill or training. So you couldn't, as the advisory firm, try to do marketing that implies you need to go with a registered advisor and put registered in all caps or red text. No, it's just a statement of fact. But before you sign up with any investment advisor, you need to look at this brochure where they explain their business, they explain their fees, the types of clients they work with, how they approach portfolio management. Do they or their employees have any disciplinary problems? Usually not the firm, but if they've been around long enough, there almost has to be a few individuals. How do we place trades? They use their own broker-dealer, TD Ameritrade. Do we pay others for referrals? Do we get paid to refer our clients to CPAs and lawyers, etc.? Do we have control of your assets? Their broker-dealer does. And as they would explain, they do have discretion once you grant it by signing the advisory agreement.